It's been a long, interesting road traveled, that's for sure. But our patience is definitely paying off here now, and it is a nice feeling. So now, our concern is, when do we sell and how much do we sell?
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, what can you say about these metals markets? Right now, as we speak, gold 35.77 and change, silver 41.38. Silver hasn't been this high. Well, gold is trading at a record, but silver has not been this high since 2011. What a year that was. And with us now is David Erfle. Of course, you'll find him at juniorminerjunkie.com. That's junior, M-I-N-E-R, junkie, J-U-N-K-Y, not J-U-N-K-I-E, which is something else all together. David, I saw you you were dancing on your desk when we first started talking here. What can you say about this market that hasn't already been said?
Well, I stopped dancing on desk quite a while ago, but in my mind, I'm dancing on my desk. Yes, it's happy times for us here in the sector for that. We've been waiting for these happy times for quite a while. I mean, last year we had the gold price go up 27%, and then in the end, the miners were only up 13%, providing just 0.5% leverage. So now we've got the gold stocks catching up to the gold price. We had the gold price hit an all-time high of 3,500 back in April. And as we speak right here, we got gold futures banging on the 3650 door here. So the gold price had gone sideways throughout the summer while the gold stocks were catching up big time, because in that time we had the miners produce outstanding free cash flow for 2 consecutive quarters when they announced blowout earnings in Q1 and Q2. That was happening while the gold price was going sideways, and also their costs have pretty much remained in place while the gold price has gone through the ceiling here. So the gold stocks are catching up to the gold price. And now the juniors, last week, a lot of these lagging juniors are exploding out of these huge multi-year bases, and they're catching up with the majors. And at the same time, we have the silver price at 14-year highs, trading over $40 for the first time in 14 years. And now I think December silver is over $42 right now as we speak, and the next resistance is like $50. So yeah, it's happy times here in the sector.
Yeah, well, so if you were a subscriber to Junior Miner Junkie, and let's just say, somehow you discovered it 2 years ago, where would your portfolio be right now?
Your portfolio would be about 135% higher. While the GDXJ is probably about 80% higher. So, because what happens when these bull markets get going in the sector is the juniors begin to outperform the miners in a big way. Because before then we had the juniors underperforming the miners while the miners were underperforming gold. So the past few years have been kind of sparse as far as profits were concerned, but they were a great time to accumulate positions in these companies with huge upside potential once the conditions are in place, like right now, for them to go higher. So a lot of patience is required while you have all this time to accumulate these companies. And that's what my subscribers and I have been doing over the past couple of years. And this year, that patience and that due diligence is paying off in spades.
So is it too late? have you missed the party if you didn't?
Well, I mean, as far as getting into the sector at lower risk prices, it's later than it was before, absolutely. But this up leg is getting stretched, and we're due for an interim peak. We might have even hit it today, as far as the GDX and GDXJ is concerned. The GDX got close to its all-time high this morning at 66. That's not adjusted for dividends. But when it did hit that 66 was back in 2011, when the gold price was attempting to run to $2,000 an ounce.
I remember.
Yeah. So, as far as an interim peak is concerned, we're either at an interim peak or we're close. So there is some consolidation up ahead. But as far as the big picture is concerned, we still have a long way to go, I believe. And also, if you take a look at the gold price, that's getting stretched also. But the gold price is breaking out.
You already disabled your internet connection and computer for suspicious activity.
I don't know what the hell that was. Sorry about that. You just made
That's okay.
Yeah,
that's okay.
Yeah.
So,
okay.
so the gold price is breaking out of this 5-month symmetrical triangle now, and its target, the symmetrical triangle breakout, is like 3850 to 4,000. So, and I wouldn't be surprised if that's hit pretty quickly, because momentum-based traders have come into this market at the beginning of September here. While the stock market is rolling over, they take a look at the S&P 500 rolling over, and if you look deep into the S&P 500, what's the number one gainer in the S&P? It's Newmont. It's
Newmont. Yeah,
right, and it's the only gold stock in the S&P 500, and it's doubled. Its stock price has doubled. So imagine you're a fund manager, you're coming back from vacation, and you see this, and if you don't have as much gold exposure as you'd like, then you're buying Newmont and you're buying some majors. Even though the price is a bit stretched, it's the gold stocks are still undervalued basis the gold price, because the stock market is just now beginning, I believe, the market is just now beginning to price in a solid floor at $3,000 gold. And these companies are producing gold. The average all-in sustaining cost to produce an ounce of gold now is between $1,600 and $1,650. That's huge margins. And and Newmont, just free cash flow alone in Q1, Newmont produced $1.5 billion in free cash flow, and then Q2, $1.7 billion. I mean, that's a full year run rate of over $6.5 billion of free cash flow. So you take a look at that, and you take a look at the other sectors in the S&P 500, they're priced to perfection, and they've already gone on these huge runs. So the gold stocks still have some catching up to do, even though we're due for some healthy profit taking here.
All right, so M&A activity, because while it's all rosy for the Newmonts and the Barricks and the Agnicos of the world, but they're running out of gold here. They're producing it way faster than they can replace it. When does the scramble happen? And will they avoid the mistakes of the past? Or
yeah, absolutely. I mean, that's what's on investors' minds now, right? I mean, they're saying, okay, you've done a great job shoring up your balance sheets. You've got fantastic balance sheets now. You're buying back shares. You're paying healthy dividends. I mean, when I got into this sector, over 20 years ago, it was unheard of for a mining stock to pay a dividend. And now they're paying healthy dividends. They've got strong balance sheets, unlike what they had at the top of the last bull market in 2011. They didn't really have healthy balance sheets, and they ended up going out and buying low grade bulk tonnage ounces at top prices, thinking the gold price was going to continue to move higher forever. And I think they've learned from those mistakes, and they are a lot more cautious, and they've been proven to be so. But if you take a look at what the juniors are doing now, we're coming up at these conferences here at Beaver Creek, and then followed by the Denver Gold Forum here next week. And this is where these guys get together, and they talk about M&A, and they need to replace these ounces now. So I wouldn't be surprised to see some some high profile M&A announcements come out of these conferences. And, once it starts to happen, it snowballs. And then I also would be surprised that we see an announcement of a junior being taken over by a major, and then we get into a bidding war. That's what we really want to see. That'll really get the M&A juices flowing, and it'll get sector investors even more excited.
And there's so few high quality juniors out there that the ones
especially silver.
Yeah, totally. So when it does hit, it's going to hit big. And it's going to hit hard. Where do you want to be when this happens?
He's come off the board. We saw Gatos. We saw Silvercrest taken over by Coeur d'Alene. So, they understand that primary silver projects, especially high grade primary silver projects, are rare. So I think they're going to be going down the food chain and be taking over some of these juniors that are de-risking these projects that are yet to be in the finance stage. So I think that's in our future where these majors start to go down the food chain, and they're going to take a chance and go ahead and buy them out a little.
Right.
They're getting a lot higher.
So what about the fact that the U.S. government is poised supposedly to put silver and copper and potash on the critical minerals list? That seems to have been the spark, the catalyst that set off silver at this point further.
Right. And Saudi Arabia getting into silver as well. I mean, that was huge news.
Yeah. So we were ahead of them all, you and I, David, right?
It's been a long, interesting road traveled, that's for sure. But our patience is definitely paying off here now. And it is a nice feeling. So now, our concern is, when do we sell and how much do we sell? Right. So you have to have, before you buy anything, you have to have a sell strategy. So, and that's especially the case in these junior stocks, because they're like lit matches. They have these huge runs, and it's always best to say, take a little money, take a little profit off the table, and get your original investment out of it at some point. And it's easier to hold it for the long haul. So, depending on what your financial situation is, depending on the size of your portfolio, everyone's got their own sell strategies, but you have to have a sell strategy in place, because you don't want to end up having emotions, run your buying or your selling. You want to make informed decisions on buying and especially selling. You have a target. When am I going to take some profits? Because the ultimate goal when you get into a junior is for a takeover, right? I mean, that's the great thing about these things is you get into something, it looks as you're holding it, the company's doing all the right things, raising money at the right time, keeping the share count low, putting out, positive economic studies. And it looks like the company, wow, I've got a good one here. It looks like it's going to get taken out. Okay, at what point am I going to take out my original investment and hold the rest for a buyout? And then hopefully that buyout comes a lot farther down the road while the stock goes up on its own before it gets taken out at a higher premium.
Yeah. Yeah. So the old saying, you never go broke on Wall Street taking a profit, right?
Right. That's right. Bulls make money, bears make money, but pigs get slaughtered, especially in this sector. If you're, I've learned, I've had so many profits that I've left on the table, but they were all good learning experiences, right? I mean, what happened here? Why did I end up not taking more profit in this stock? This is why. I'll make sure it doesn't happen again. You take all these life lessons in this sector, and you apply them to your sell strategy. It's because it's an ongoing lesson. There's so many lessons that you learn in this. You never know anything. Something always comes up to where, wow, I didn't even think of that as far as a reason for a stock selling off or whatever. So, no matter how fantastic a project looks, anything can happen. So you want to take a little bit of profit on the way, for sure.
How many times in your career here, is a later career in your life, have you seen a stock that you thought was absolutely amazing, that you were going to retire on it, and for some reason, unbeknownst to you, but well known to the insiders, it blows up.
Yeah, I mean, I don't have enough fingers. I don't have enough fingers to count how many times that's happened.
They hear.
So, and that's what draws us to this sector, right? It's literally like the wild, wild west. You could pick a stock that you say to yourself, my God, this is the one. This is the one I should really load up on. And I learned a long time ago, never put any more than 5% of your investment capital into one stock, because anything could happen. Anything could happen at any time. And it might not, it's usually not the fault of the management of the company. It could be the jurisdiction they're in. Something happens with the government and they decide to do something in the mining sector that just takes you by surprise. And no matter how fantastic your project is, it's screwed because they changed the law. So anything, metallurgy, some metallurgy out of the blue could happen, anything. And I'm not a geologist. So, it's behooved me to find out, to basically hone your sell strategy to where you're in a good place when we're in a place we're in a place like we're at like right now, where we're seeing all these profits coming into our portfolio rapidly. So you got to have that plan in place, because you don't, like I said, you don't want to have emotions make the decision for you.
Okay, so is it a good idea to sell half when you got 100% run?
My strategy is, well, first of all, I don't get into any junior unless I see at least 3 times upside potential. So based on that, when a stock triples, that's when I take my original investment off the table. And I've got 20 positions in my junior miner junkie real money portfolio right now that my subscribers also follow. 4 of them now have tripled, and we've taken our original investment out of 4 of them. There's 2 others that are close to doing the same, and several others that are not far away. So once that happens, and I also learned that I always take my profit completely out of the portfolio, right? I mean, I've got so much money invested in these things that I don't want to reinvest profit. Yeah. So I take the profit out at the end of each year.
Okay, well, hey, that is some sage advice for those of you out there who haven't really experienced as many cycles as David and I have, and who think there's this sure thing, this miner that's they're doing deep sea mining in the Pacific and hoping to find Lemuria, the continent of Lemuria, while they're at it, and nothing can possibly go wrong. But this is the riskiest business in the world. And like you said, perfectly honest management. It's not a lifestyle company, which you should always avoid. And all of a sudden, and that's why diversify, don't put it all there. David, how do we get your publication?
Juniorminerjunkie.com with a Y, Junky. That's my website. And I also write a column on Kitco, comes out on Fridays. Usually every Friday, but in the summer I've been taking a lot of Fridays off. But you can find me at Kitco, and you can find me on my website at juniorminerjunkie.com.
All right, great. The link's in the show notes to this interview on financialsurvivalnetwork.com, but I've really moved that over to Substack. Got tired of the website grind. Substack does all that stuff for me. You can get virtually everything for free. If you want to give me money, I'll take it, but you don't have to. But there's some specials that you want to subscribe for. And questions, comments, KL@kerrylutz.com. David, we'll talk to you again, hopefully in a month, and more good news.
Thanks again for having me on, Kerry. Look forward to speaking to you again.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.